Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Monday. It is the 7th of June, and it's actually the second trading week of June, but it's the first trading week of June that's not fragmented. If you remember, last Monday was a holiday, and whenever you have a federal holiday, any kind of holiday, even if it's a half day, it breaks the market. A lot of hedge fund guys take a vacation, look for an excuse to take a vacation, and it ends up being a really fragmented week. And then towards the end of the week, or about 3 or 4 days after the market starts again, volatility starts moving into the market, which is kind of what we saw last week. It was very quiet as the week started on Tuesday, Wednesday. Thursday, things began moving, and then Friday, we had the full market back. But this week, we have a full week. The S&P is higher, and let's talk about what we've got on the plate. Now, every week has the different characteristics of the Fed. Sometimes it's corporate news. Sometimes it's job reports. There's always a theme. And this week's theme is inflationary pressure. We've got international trades in goods and services. We've got wholesales inventories. We got consumers price index. And we've got consumer sentiment. So we're going to get a really good idea of consumer demand, inflationary pressure, everything non-related to employment. But we do have jobless claims on Thursday. That's going to be the big report of the week, and consumer sentiment. Consumer sentiment reflects on the GDP. Jobless claims were now into the 300s. The 4-week moving average is 428. The employment situation was better than expected last Friday. Thank God it wasn't 266,000. But it looks like things are moving in the right direction. Less people are applying for claims. The target is 369. Honestly, it's been moving really good the last 4 weeks. Anything around the 4-week moving average is not going to really negatively impact the market. Also, consumer sentiment is not known as a big report, but it actually is, because consumer sentiment impacts retail sales, and retail sales make up 2/3 of the economy, of the GDP. So we got to be really mindful of consumer sentiment. Looking at the indices right now, we're down random. Anything where you see the Dow down 36 or up 36 points, the Nasdaq up or down 22 points, that's random. That means the overnight markets, the European markets, the Asian markets weren't very, very telling. Looking at the S&P, we are right now, we never touched the 50-day moving average, so we never went bearish, and we never went into the twilight zone. The market tested new highs. We are near all-time highs, but this trading action, don't expect too much too soon. The market is grossly overbought, as as I showed you over the last several weeks with momentum levels, and I'll just show you a quick peek at how they're looking right now, so you can understand why the market is. Look at that. 90% of stocks in the S&P 500 are trading above the 200-day moving average. And while you're thinking that's really good, and it is, it's bullish, look at where it is historically and where the market goes. It goes down. And then when you look at the number of stocks trading above the 50-day moving average, the number, it's 70. It's not as bad, but as you can see here, it's moving lower. So momentum is seeing distribution, and that means we're in an overstretched market. And whenever we're in an overstretched market, it's very hard for momentum levels to rise. And if I showed you the Nasdaq, I'll spare you, but if I showed you the Nasdaq, you would see very much the same thing. The Nasdaq is much choppier. It's been much choppier because it has a lot more sensitivity to interest rates, and interest rates are set to go higher towards the end of the year. Even Yellen made a statement over the weekend. Now, if you look at it right now, we look like we're going lower on interest rates. You see bonds are going higher. Higher bonds means lower interest rates. But I don't think this is going to be sustainable. Maybe a little bit better, but ultimately, I think we're going to go back into this range, and we're going to kind of stay in this range. It'll be interesting to see if bonds go higher, because if they do, that means interest rates are going lower, and I don't think they're going to go much lower from where we're at right now. So I would be fading these upside moves right here. And if it is going to go higher, I doubt we'd go much above 144. Ultimately, I think we're going to cool down, and I think bonds are going to go lower and interest rates are going to go higher. But I don't think that's going to be happening for another, let's see, June, July, maybe another 6 to 8 weeks. And then we're going to start, and then interest rates will start moving higher and bonds will start moving lower. So I don't think there's a lot of upside here right now. Let's get to the fun stuff. looking at the major sectors, and I'll just kind of quickly go through this because it is Monday. Let me go through the major sectors here. It doesn't want to let me go through the major sectors. That's weird. I guess bar chart's not working. So looking at the S&P 500, this is the S&P 500. I don't know why stock fetcher doesn't want to work for me this morning. But these are the stocks that are going up here. As you can see here, nothing new. We've got Devon Energy, Marathon Oil, Metals Company, Energy, Basic Materials. The stocks that are moving higher here are DXC and Schlumberger. Let me show you these two stocks. This is DXC. This stock it's moving. And as you guys know, that when stocks start moving higher on my relative strength scan, my CSI scan, they move. So if you see what this stock does, now what does it do? It's an IT service for large companies. They were formerly known as DAX Technology, IT services, analytics, applications, business processes. This company tends to pick up steam when business technology picks up. And it looks like business technology and clouds are starting to make a little upside. It's got a 126% one-year return. It's got a market cap of only $10 billion. And again, the stock has been moving up on my relative strength scan. There is accumulation moving on to this stock. And as you guys know, when stocks make it on my list, they tend to stay strong for quite some time. Now, what I originally wanted to start off was with the 10 major sectors before going into the S&P, but it was stuck. But as you can see here, energy, financial, basic materials, real estate, industrial, that's where the focus is right now. And communication technology is right in the middle. But this stock, DXM, what I like about this stock, if you see here what it does, it's information technology, data preparation, usually for big businesses. And technology businesses, with COVID declining, business tech is increasing. So I do believe this stock has some upside potential left. Substantial upside potential. I like how it's moving. You may want to wait for a little pullback, but keep your eye on the stock, DXC. Another stock you may want to keep an eye on that's going higher on my relative strength scan. And these are the sectors, but let's go to the relative strength scan now. Is this SLB stock, Schlumberger. Let me show you this stock. This is another stock. And if you look at what Schlumberger does, energy. And energy is, as you could see here from my 11 sectors, energy is the number one. But I do believe this DXC technology, because it helps mostly institutional and basic material companies, large-scale businesses, will go up as well. As far as pullbacks on my scan, I've got two pullbacks. I've got IMAP. The stock is pulling back a little bit. It is let's see what it does. Pharmaceuticals, medical stock. It develops commercialized biotech to treat diseases, significant medical needs, particularly cancers. It is a Chinese company. It's up 227% over the last year. 227%. They're definitely doing something right. And another pullback I'm seeing is Agilent Technologies. And if you look at what this stock does, it is a healthcare technology. So right now, healthcare testing, Agilent, IMAP, healthcare and testing, technology for big businesses, for the cloud, and oil. That's where the money is. Now, as far as tech, let me just take a quick look at this communication and tech. Let me look at these sectors on their own. Let me kind of go through these for you. Real estate is looking really good right now. Basic materials is looking really good right now. Nice and choppy. Looks like it's going to break out. Financials are looking great right now. Look at that. Energy is looking really good right now. Technology is starting to rally, and it broke above this high. So we may be getting a nice little bump up in tech. That's what I was thinking last week. It looks like we're going to get a nice little bump up in tech. So don't throw out the tech stocks this week. Utilities are not looking that great. Consumer discretionary is not looking that great. So you got to be really careful, because there's a lot of tech stocks that are consumer discretionary stocks. That's not where you want to be right now. Healthcare, So if I was a betting man, I would bet against healthcare, consumer discretionary, and utilities. But I like tech right now. I like tech. I like communication tech. I like consumer staples. I've been talking a lot about consumer staples last few weeks. I like the industrial sector. I like pretty much everything except the healthcare, the consumer discretionary, and utilities. What I'm interested in, I like technology right now. Let's take a quick look at the NASDAQ. There's a good chance we may get a rally out of this. I mean, it's time. Now, let's see if we can get, this is the first day we had Friday of clearance above the 50-day moving average. We need 2 complete days of clearance. So if this bar does not touch any part of the moving average, I'll call a bullish market to the NASDAQ 100. And as far as stocks, tech stocks that are starting to come up on the S&P, for tech stocks, we've got the DXC, we've got, let's see here, Fortinet, and we've got Seagate. And as far as the NASDAQ, just in case, right? You want to be prepared this week. You've got Applied Material, Western Digital, NTAP, NVIDIA. NVIDIA, ASML, NTAP, Western Digital, Applied Material. That would be the focus right there on the tech. Let's take a look at Applied Material and see how it's looking. Yeah, it's starting to look good. I think we're going to get a little rally in technology, and that's very, very positive for the market. And it's also telling us that interest rates are going lower. Bonds are going higher, rates are going lower, and that means tech could possibly break out here at least one more time before we really get a lot of interest rate pressure. Now, I've got something important for you, something timely, something urgent. Tom Busby, you guys know Tom Busby. He's widely considered one of the world's top traders and researchers in the industry, and he's a great friend of mine too. So when he says that a 4-day window is the most important ingredients for a string of triple-digit winners, he definitely has my attention. Now, Tom explains how the same window repeats every single week, and that's why he's delivered some of his best trades of the year. Plus, he's completely removes traders' weekend risk exposure. Did you hear what I just said? No more weekend risk. Have a weekend stress-free without trying to figure out if your stock is going to go up, down, sideways, or whatnot. Wouldn't it be great? Less stress over the weekends, which is critical in these volatile markets. You don't want to have weekend stress. Chinese markets are moving, Asian markets are moving, European markets are moving. You don't need a headache over weekend stress. People could spend the weekend day reading their favorite books, playing golf down in sunny Florida, like me, or grabbing brunch with their friends. I think I did a little bit of all of that this weekend. Folks, are you ready to find out how everyday traders like you can enjoy long weekends without worrying about what will happen on Monday? Man, that sounds great. I love it. Click the link below to see how it's done. Folks, Tom Busby's onto something. These 4-day power windows are the key to giving you a lot of relaxation, stress-free, profitable trade opportunities without having to worry over the weekend what the hell's going on with the markets. Follow the link below. Check it out now. Most importantly, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Folks, you've got to stay one step ahead of the market by following these videos and getting the next one early. And don't forget, tech could possibly be making a move because interest rates are going lower, bonds are going higher. This could be very, very instrumental because remember, there's that negative relationship between interest rates and tech. I'll talk to you guys later. Have an amazing day. Bye, guys. And follow the link. You don't want to miss out on Tom Busby's this 4-day power windows. I love them.